they seem to develop in all the markets, and they stick around for a while, and then suddenly they're out of flavor and it's pennants, and then, so there's all sorts of things that we follow when we do analysis. But what I'm noticing is that when Head and Shoulders are the flavor of the week or month, it's all over the place. When it's pennants, it's all over the place. Right now, it happens to be swing days. I showed you the swing days in the indice markets and told you don't fall in love with the upside. And if we don't get above yesterday's high, the swing day's in place and we will drop. Well, right now we are trading about 20 points lower than where we settled. We're around 943 right now, and maybe even lower than that, right? 942. The market looks like the swing day and 2-day rule from yesterday is taking effect in the indice markets. Now, as far as the indice markets are concerned, this is Friday. It's the last Friday of the month. It's a Friday, which is the end of a quarter. There may be window dressing from whatever fund managers are left out there. The problem with window dressing, and here's what it is, usually at the end of a quarter especially, or at the end of a month, a lot of fund managers sell out all the stocks that aren't doing well and buy more of the stocks that are doing well. Hence, at the end of the month, their portfolio looks good. The problem with that is, where are you going to find any stocks that are doing well? So these fund managers that are going to go window dressing are going to be shopping really lightly, I would think, but you never know. So that is a factor for tomorrow in the S&P. We think two things. Well, I think two things can happen. Likelihood is we're going to have a big down day tomorrow, but if we get over certain levels like the 960s, we will probably trade straight up to 10. So tomorrow is one of those days where it could go either way. However, my analysis on the onset is pointing for down in the S&P. Let's see what happens. We'll trade it as it takes place. We'll let the markets breathe and tell us what to do, and then we'll react to it. So come on down to my site. It's www.livewithoscar.com. Jump in the chat rooms and I'll let you know. I'll give you the signals as soon as they arise. Whether we're buying or selling, the likelihood is I'll be selling because I like selling rallies in bear markets and not buying into them. So I'll be looking for sell areas, but if it flips, I may flip with it. All right, that's the S&P. Now what we have going for Friday or October 31st in the currencies is that very same thing I was just telling you about, swing days. They're all over the currency charts. So I am going to show you right now on the board some charts. I'm going to illustrate some swing days and where currencies look like they're going. And then you do homework after you've looked at mine and see if your homework agrees with my homework. Let's go to the charts, traders. Okay. I don't even know what I said there. I just spoke. I just let shit out. I didn't even think about it. I hope it was good.
It made sense.
Did it?
Yeah, we just said something or made a face or something.
I did that because that's where I want the wolf to howl.
Oh, I got you.
You wrote scary. And I said, oh, scary. All right. Remember that wolf was supposed to howl? So I stopped and listened. That's why I want you to do the wolf.
Okay. Because I don't want to talk about that, but I was thinking when you were talking about the volatility.
The first chart you are looking at is the Euro currency December daily bar. And I'm going to show you these swing days that I'm telling you about. Right here you have your first swing day. As you can see, the market rallied up, put in a higher high than anything around it, dropped down, settled by its lows, and then we broke down. Swing day here, same sort of action. The market put in a high, dropped, then the next day, we got just about as high as the day before, and boom, we dropped. That's how you handle swing days. I've shown this to you before. If you have a day like this, end a day like this and it settles towards the low end, if in fact the market rallies up and stops about here, you have a valid swing day and you expect the downside. So here we are now. We had a flag, and I told you flags were all over currencies and what might happen. I showed you this and said the downside would come. Here was the flag, and the downside did come from it, right? That was last week. We did videos about it. Now we're looking at a swing day right in the middle of that flag. And look at this swing day, traders. It rallied here. Then you had the swing day. The next day it got right to the high of the day before and broke, and the big down move came. Now, check this out. We had a couple of rally days in a bear market. And you know I'm a big fan of selling 2 days up in a bear market. The market put in a huge swing day, settled towards its low end. And tonight, look where it is already. This is Thursday night to Friday. That line you're looking at right there, that green line. That's where we are now. It didn't quite get this high yet, but look at how the swing day is already working, and it's on its way down. Now that's euro currency. The currencies, many of them trade hand in hand. Euro and the British pound and the Australian and the Canadian, they seem to hover together, while lately the yen and the dollar have stayed together on the upside. So let's look at a few more charts here and see if that's working on the other currency charts. Okay, traders, the next chart we are going to look at is Australian dollar December daily bar. Swing day right here, traders, and that swing day works well. You can see it. The market had the same look I showed you on the last chart. You actually had a little swing day up here as well. Then we put that same pennant in that we put in the last chart, the euro I just showed you. A swing day right in the middle of that pennant. Now we have a swing day here, traders, and look what happened tonight. The Australian dollar got right up to the high of yesterday and began to break down. It's all the way down here right now already. That swing day worked perfectly so far. Looks like it's going to hold. But now you can see that the story's starting to develop. You had 2 big up days, a swing day, the market started to head down, but that's 2 currencies that hover together, right? They had a couple of days up, and they're both putting in formations now that make them look like they want to go lower. Granted, I will give you this, the indicators that are connected to these currencies are still a little bit bullish looking, but there are certain times that the formations themselves supersede the indicators, and I think this is one of those times. Let's look at a couple of other charts here so I can show you what I mean. Okay, traders, the next chart we are looking at is the dollar index, the US dollar index daily bar. And look what's happened here. The dollar index held a major support line. It had 2 big down days right into a major support line, as you can see, held it, and we're all the way up here already, traders. This is Thursday night into Friday. That's where we opened and rallied up to so far. So the dollar index that was going opposite of the other currencies is now held support and is now rallying, where those currencies I just showed you ran up and hit resistance and are now breaking down. So there is a pattern here. The currencies are running together and they're heading right back into the same direction they've been in for the last few weeks. Euro currencies and world currencies down, and US dollar looking strong. The US dollar will continue to attract more investment money from across the globe over the intermediate term. That is what I see happening here. Let's look at one more chart now, traders. Okay, traders, the next chart you're looking at is the Japanese yen December daily bar. And just like the dollar index, the Japanese yen has been in a bull market. As you can see, ever since we got over this double top, it's gone into a bull market. Always, once you're in a bull market, you have to see if it hovers around other markets or correlates with other markets, right? Lately, this yen has correlated with the dollar index in a big way. Now, look what the yen did. The yen ran down and held its support line just like the dollar index did. After 2 big down days, it put in a holding day, and then boom, it rallied all the way to here so far. Looks to me like the yen and dollar are right back in buy mode, and the other world currencies are in sell mode. Do your own homework, traders. Let me know if your homework does not agree or does agree with mine. I think you will find it agrees with this whole thing right here. So, you've seen the charts, traders. You see what I'm talking about? Those swing days are all over the place, traders. And when you have swing days like that, and then the ones that are working opposite the swing days come down into support and start to go back up, that's telling you that the currencies are turning back down and the dollar and the yen are turning back up. Now, the yen, from what I understand, Japan did an 0.3% rate cut today. It's symbolic, traders, because they have no interest rate at this point. Yeah, it's practically zero. They did an 0.3. They're down to almost nothing. I don't think that changes any picture at all, but there was a rate cut by the BOJ, and that happened this evening. Now, traders, those currencies, I think that right back down again. Yes, the indicators are still pointing up, like I mentioned, but there are times that the formation that you see in the chart absolutely supersedes any indicators, and I think that's how we have to view this. Yes, I could be wrong. Anybody can be wrong, but you see those swing days work almost all the time, and they kept us in check in the S&P yesterday, because in yesterday's video, I showed you those same swing days in the S&P. What the S&P did, it tried to go up, it couldn't, and it started to come right back down. So let's see if that's what happens. All right, so it's Friday. Thank goodness we're through this week. It's been a crazy, insane week, traders. I want you to be very careful out there. Okay, I want you to be very careful out there. And I want you to put your stops in tomorrow, traders. Never trade without stops. Keep your emotions out of this thing. And make sure you come into the chat room so we can help you trade together. All right, traders, give me a call anytime, day or night, 702-629-4755. And continue to shoot out those emails, traders, because I appreciate it, and I get back to every one of them. If you send me a chart, I will analyze the chart and either speak to you in my chat rooms or send you back a reply in my emails. All right, traders, I guess, take it easy tomorrow. As I said, you may get a surprise run up because of window dressing, but don't fall in love with the upside. Whatever you do, no matter what happens, traders, if we get some kind of rally, even if it rallies tomorrow and Monday and Tuesday, think about this. We are in a serious, serious bear market. Those same analysts that were on TV telling you we're not in a bear market, we're not in a recession, the whole way down, are now calling the bottom. They were wrong all the way down. What makes them right now? So I wouldn't listen to TV land so much. I would look at the analysis. I'd look at the charts. I would use my own judgment here and see what the charts tell you, because traders, the fundamentals always come out in the charts first. All right, traders, that's about it. I'm getting out of here. Make sure you enjoy your day tomorrow. Be safe. Have a great weekend. And don't forget to say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Emotions are